Hello, Pro Traders. I've got an interesting and mind-blowing concept that I want to share with you on the forex market. This one is quite simple and easier for you to understand. So, regardless of your level of trading, whether you are a beginner, whether you are an intermediate trader, or you are a professional trader, you can always apply this on the forex market and you will make good informed trading decisions. This strategy I'm about sharing with you is an advanced and institutional model of trading. However, this strategy actually involves you understanding basic and then simple concepts in the forex market. Enough of the long talk, let's get straight into the video. So, like I said, this concept is highly advanced. However, it incorporates simple and basic concepts in the forex market. The simple and basic concept in the forex market, we are looking at trend. So, one, you need to know how to identify trend in the forex market. Now, with trend, all I want you to understand is the two basic forms that we have in the forex market. Either we have a bearish trend or we have a bullish trend. So, if price or market is making higher highs, then we say we are in a bullish trend. However, if we have price making lower lows, then we say we are in a bearish trend. So these are the two forms that I want you to consider with regards to the strategy we are looking at. The next thing is liquidity. Now with liquidity, we are looking at stop losses. Where can we actually find stop losses in the forex market? So ideally, we are looking at an imaginary places or a potential place where you imagine or think that retail traders will put their stop losses. And it is quite obvious in the forex market. So what do I mean? We are looking at liquidity in the form of a double top or triple top, or we are looking at liquidity in the form of a double bottom or triple bottom. So if I have this area as a resistance zone where market keep on bouncing or rejecting consistently, so I define this area as a resistance zone, double top or triple top, right? Then obviously if someone is to place a trade within this area, what we expect is that the person places the trade right here and the stop loss above the zone. Then the person will expect a bearish move to the downside. That is quite understandable, basic in the forex market, right? The second scenario is when we have price rejecting consistently from a particular point. Then we define that price area or that price point as a support, double bottom, triple bottom. So the person takes the trade right within the zone, then the stop losses right below the zone, then expect a bullish move. That is what we do know, basic. So what I'm saying is that you should know liquidity in the form of a resistance zone or a support zone. Then you should know the trend of the market. That is what you should know in terms of the strategy. So quickly, let's look at real-time chart and then try to spot practical examples on the forex market. For the purpose of the video, we will be considering the daily time frame of gold. And right here, we can see a potential resistance here. Why? Because we have price rally to the top and then price gave us the bearish move. And then why I do say it is a potential resistance, because any turning point in the forex market, it is a potential zone to form a resistance zone. So what we did saw is that when price returned back into the zone, we actually have people getting in expecting the bearish move. However, when we had that push to the downside, price eventually rallied to the bullish side. What we want to be interested is in the candle that actually breaks off from the resistance zone. So looking at price action right now, we are interested in this bullish candle right here. So the question is, why not this candle right here that actually breaks off from the zone? Obviously, the stop losses will be above here, but you see we had a reaction within the zone. Price gave us that reaction, right? So ideally, anybody that is in the trade will be at break even or will move their stop losses from entry into profit. So let's say their stop losses are just within here. They actually got in at the tip. And then we have, this is the candle that took away all their stop losses, or this candle actually hit their break even. So in simple words, we are looking at the candle that actually cleared stop losses, whether the stop loss is at a break even or the stop loss is actually at where you intended or you wanted to put your stop loss, or where you have placed your stop loss. So in our case, we are looking at this particular candle right here. Let me try and zoom in so that we can actually get the concept very well. So fast forward, we have our resistance zone here. Then obviously our stop losses will be above the zone. Price gave us the reaction, so obviously some of our stop losses will be within here. Then eventually we have this bullish candle smashing through or clearing all our stop losses. So the idea is to enter at 50% to 70% retest of this bullish candle and expect price to continue in the bullish direction. Well, the good question is, how do I measure 50 to 70% of the candle that I am interested in? Well, it is that simple. You got to pull out your Fibonacci, then you measure from lower wick to upper wick, or if it is a bearish candle, you measure from upper wick to lower wick. In our case, we do not have the lower wick, so we measure from the body to the upper wick. So Alt plus F, which is your keyboard shortcut for the Fibonacci retracement, then you measure from the lower wick to the upper wick. Let me try and adjust my Fibonacci so that you can see my levels. So I have my 0.88 level above the 1, then I have 0.71, I have 0.5, and then I have 0. So all I wait for is retracement into the 50%, 70% level. Well, you can always expect price to retrace into 80%, 90%, but in rare cases, when you have price into those zones, price is always targeting liquidity right below that candle that broke out the resistance zone or cleared all stop losses. So yeah, this is the resistance zone. We actually got in, price gave us the reaction, but eventually we got swept out by this bullish candle right there. So the idea is to look for 50-70% retest, and obviously it did came right there. Then we had the bullish trend resumed. This is another beautiful example that we can consider. We have this resistance zone right below the demand zone. Obviously, retail traders were expecting the zone to hold, so they got in, price gave us the reaction, but eventually smashed through or cleared all stop losses. Our candle of interest is this bullish candle right there. We are looking for 50% or 70% of the retest of this candle, then we can resume the trend. It did came 50% retest perfectly, and then the bullish trend resumed. So here are more examples to validate the effectiveness of the strategy. We are looking at this price action right here. We have the first touch, we have the second touch, we have the third touch, and then obviously we have this bullish candle coming in, clearing all stop losses to the bullish side. Then by strategy and by principles, we are looking at 50% retest of this bullish candle. Yeah, it did came. Perfect setup, perfect timing, and then we had the trend resume. Now this is another very good example right here. So we are looking at this place as a resistance zone. If you go down time frame 1 hour, 4 hour, 45, 30 minutes, you realize that this is a resistance zone. We have this bullish candle coming in, clearing all stop losses. Then we are looking for 50% to 70% retest of the candle. It did came, perfect setup, perfect timing. So the idea is quite simple. You always want to look for that resistance zone. That, of course, let me add that a proven resistance zone. How do you know it is proven? We have price respecting the zone several times, then you know it is proven. You wait for that candle that breaks out from the zone, clearing all stop losses, and then you look for 50%, 70% retest of that particular candle. Now you realize that we are always interested or looking for that particular candle, that specific candle that breaks out or leaves the resistance zone. That candle is an advanced candle. It is an institutional candle. The banks are looking at that candle, so you should make that zone or that candle your point of interest. So more examples, we are looking at first touch, second touch, and then of course the reaction. Eventually the bullish candle came, clearing all stop losses. By principles, we are looking at 50%, 70% retest of the bullish candle. Then we have the retest exactly. Perfect setup, perfect timing. the bullish trend to continue. So this strategy works on all time frame. However, you want to consider spotting or finding trading setups on the higher time frame, then you scale down to the lower time frame and then you look for entries. Why? Because the higher the time frame, the more significant or the impact it has on the forex market. So we have this resistance zone here, and then we have the bullish candle that cleared all stop losses. And by principles and rules of the strategy, we are looking at 50% retest or 70% retest of this FU candle or institutional candle. Then, of course, we have the 50% retest or 70% retest, and then the bullish move came. So, this is a simple strategy. One, you are looking for that proven resistance zone or a support zone, and then you are interested in that candle that actually cleared all stop losses. Then you want to take your trade in the direction of the trend. It is a simple, easy concept that you can always apply.